It's Wednesday, February 15th, 2024. And the market just opened. Right now it's 9:31. Well, market have been on this is the QQQ right now. Market have been on an uptrend until yesterday. Yesterday we have a little correction, a small pullback. Because look, yesterday the Dow was down pretty bad yesterday, and we have a meltdown yesterday. Actually, kind of like, but it's saying it's an overreaction, and so we'll see. Have to see. We've been going up this whole year, 2024. If we look at this, right, since December, and then we have a breakout, and it just went. We just went, coming off a long last half of the year. Was a really nice run. So on back of the AI hype, all the minutes since 7, I have a few trade on that worked out pretty good. Was in Meta and Microsoft, those two guys really. I have a couple call spread, and they came up. They went up and up and up, and then basically let me pocket some pretty nice profit. So that's that. Right now, what we're seeing, there we go. That was the trade. Open the spread here and then close it. Took 1/3 of a potential profit. I was a little too early. I didn't catch this jump, but you never catch the top, never the absolute bottom. That's how the nature of the trade. Meta, Microsoft, pretty much the same. Both of them did run, took my profit, and that's that. The only one that didn't, I'm still holding on. These are April contract. Dip it right here. See, I opened it around here because of this right here, false hammer, and it just went sideways and then broke up. And I say, okay, and it started running. And at this point, I got out before this little pullback. Right before the pullback, and then it does a break up again. Right now, it's still right at the same area, right below, actually below, right where I took profit. So I'm thinking about, should I open the trade and to wait the next one? No, I haven't seen any signals yet, so I'm gonna wait. I'm gonna wait on this. As you can see, right in the video, these guys had this run, this crazy run. So I'm looking for. Scenario is just gonna go sideways, down, continue upward. Who knows, right? So I'm waiting for signals, right? A nice crossover on this in the video and stuff like that. So now I got out before these two bar, and it was around here, and yeah. So if we look at the VWAP, right, which is a MACD, a type of MACD. Same peak, and I get out around this peak. That's the reason, basically. I get out around when it's peaking, or the previous peak. And then now it's right here, so as you can see, it's touching. Right, so your fast moving average and with the slow moving average is right at this inflection point, what I call. And so we'll have to see. We'll have to wait for signal. Is it going to cross down and then go back up, or is it going to just bounce right off? Who knows? And we have some. Yesterday was Tuesday. We have a market meltdown. The Dow was down literally 700 points, and that really. So as you can see, they just gapped down basically because of inflation data. Inflation's kind of back, and they gapped down and went down a little. So now the market, I think, is a holding pattern. We'll have to see what is really going on. Is this going to continue, or is it going to go away? I mean, it's about inflation, the big thing about inflation. Right now, we kind of like very soft landing, narrow landing, whatever they call it, instead of recession. And these kind of just running up. That's about the Chinese stuff been melting, and they've been melting, and I'm not touching it. I'm not touching any of these until you need to break this really long downturn. It's been down for a couple of years already, basically. This is Alibaba, and this huge long downturn, you can see. And until this downturn is broken, I'm not even going to look at it. I wanted to see break off this downtrend, basically. Look at this. Even these peak doesn't matter. It will break. It come right back down. It broke up, right? I need to break really, not just above this level. Right? This is a lot more long term. You need to break this level. I need to break this and then break the red line. Only these two lines. I want to say really have some fundamentals behind it. These are just technical pullback. And I'm not going to go long on these guys. No matter how depressed the price is, I want to see uptrend. I want to follow the uptrend. I don't want to buy because it's just coming off a downtrend in that sense. So I'm gonna leave those alone. I'm looking for a new play. I have a play on the banks, expecting I opened it earlier when I opened a call spread on Bank of America. When I go long, it's 120 or 250 days out option pairs. And so I opened it around here, it went up a little and came back down. It's on back of like going a few months out that interest rate, eventually the Fed's going to signal, okay, we are on a point that they might lower interest rate. Right now the market is on the hype that, okay, inflation is over. Next, we want to see that, okay, the Fed's going to signal, okay, lowering of interest rate is coming. And then I expect some of the banks to really recover. Largely on back of that, we have the Silicon Valley banks meltdown last March. It's been almost a year already, right? So I have this long-term downtrend and broke through this long-term downtrend, retrace a bit, and then I expect it to bounce off that. So it did bounce off this technical level, which is nice. So now I just need some positive fundamentals for it to push and continue. So we have this pullback and a sideways. I'm hoping, of course, right? But we'll have to see. But I have fundamental reasons behind it. Is really that we're gonna have these guys have been depressed for a year already, and the environment is ripe for the banks, for the big banks at least, to come back. Yeah. That's about it today. I'm not gonna go really long now. But going forward, this video, I'm just go fast, to the point and get it done. And then if I have trade, I might talk a little bit about it. If not, then just ideas and what's going through my mind. And thanks for watching. That's it for today. See you next time.